Hello, my name is Lee Bushmaker. I joined MacArthur in 2006. Since then, I've been working as part of the support team at our St. Paul corporate office. MacArthur is a 100% employee-owned company and has an outstanding suite of employee benefits. This video will focus on the 401k and the employee stock ownership plan. And please note, when I refer to MacArthur throughout this video, I am referring to the whole company. Whether you're part of Weeks or EPS, when you hear MacArthur, it means you. Now, a company cannot rise above its people. And what I'm about to go over, especially our stock ownership plan, are subjects that you'll likely find very motivating. Think of this video as a quick intro. Deeper, more detailed discussions can be done at a later point. Well, let's get started. Our investment benefits consist of two parts, the 401k and the powerful employee stock ownership plan, or ESOP. I'll first start by going over the 401k. Employees can participate 30 days after joining the company. If you're a new employee, you will auto-enroll at a 6% contribution rate on the first paycheck in the month after reaching the 30-day requirement. Now, a 401k essentially works like this. An employee elects to have a portion of their paycheck flow into their 401k account. These contributions flow from your regular wages. Now, when you hear regular wages throughout this video, I'm referring to your draw, base salary, or hourly wages. Basically everything except for bonuses and commissions. Once contributions reach your 401k, that money is invested. You can choose to have your own investment allocation set up, but to help make this process easier, we have a default investment model already in place. Now, the greatest benefit of our 401k is the discretionary employer match. You're going to like this one because for the first 6% you contribute, MacArthur matches 100%. That's a built-in 100% gain. Another way to think about the match is as a pay raise. By contributing 6%, you're giving yourself a 6% raise. Now, a couple things to note on the 401k match. You'll hear the match referred to as match cash. Now, what's cool about this match cash is that it's used to buy back shares from former employees. So think of your 401k match as future MacArthur stock. Match cash will be noted here on your annual ESOP certificate. While we're discussing the 401k match, it's a good time to go over vesting. Vesting essentially means you have to be an active employee for a certain number of years in order for employer contributions to become entirely yours. Each of us earn one vesting year of service for every calendar year, January to December, where we worked at least 1,000 hours. The vesting schedule attached to our 401k match goes like this. After 2 years of service, employees are 20% vested. After 3 years, 40%, 60% after 4, and after 5 years, employees are 100% vested in all present and future match contributions. So now I'd like to dig into our ESOP stock allocations. Hands down, this is by far our biggest benefit. The ESOP literally gives each of us employees an ownership stake in the value and success of our company. Now, this is an exclusive club. The only way to own shares of MacArthur is to work for MacArthur. Another interesting fact is that a great way to create personal wealth is to own a business. Our ESOP allows you to have access to this wealth creation vehicle without the hassle of operating an entire business on your own. So to dive deeper into our ESOP discussion, I think it's best to start at the end, or when people sell their shares back to the company. We buy back shares once each year, and two things happen to these shares. First, to the extent of active employee match cash available, shares are bought back at the most recent stock price by active employees. After this step, the remaining shares are put into a loan. As we pay down our ESOP loans, shares are released to eligible employees. You first become eligible to receive ESOP stock allocations after being with the company for 1 full year. After reaching the 1-year mark, you will enter the ESOP on either January 1st or July 1st, whichever comes next. So for an example, let's say an employee was hired in March of 2016. They achieved 1 year in March 2017. This employee entered the ESOP on July 1st, 2017. Since they entered the ESOP halfway through the 2017 plan year, the first ESOP allocation will be 50%, or a half a year's contribution. This employee will receive a full or 100% ESOP contribution in the years following 2017 because they were participating during the entire plan year. For another example, let's now say an employee was hired in November 2017. In November 2018, this employee has 1 year, making them eligible for ESOP stock allocations and will then enroll in the ESOP on January 1st, 2019. After the completion of 2019, when ESOP shares are allocated to eligible employees, this employee will receive a 100% ESOP contribution because they were enrolled and participating during the entire plan year. Now, the ESOP is a much bigger benefit than the 401k match cash that I referred to earlier, so the vesting period is a bit longer. The vesting schedule for ESOP allocations goes like this. After 3 years of service, employees are 20% vested. After 4, 40%, 60% after 5, 80% after 6 years, and after reaching the wonderful 7-year mark, employees are 100% vested in all present and future ESOP allocations. Another noteworthy item. Just like the 401k match cash, your ESOP balance is updated once each year. So be sure to watch out for your certificate showing up in the mail around July. Now you may be having the thought, so how many shares am I getting each year? Yearly share allocations are determined by 2 factors. Factor 1 is the total number of shares being released, which is determined by the current year's loan payments and the number of shares in those loans. Factor 2 is each employee's portion of the total eligible compensation. This is found by dividing any given employee's eligible comp by all MacArthur eligible compensation. Your portion of total eligible comp is equal to the percentage of each year's share release you will receive. So now you may be thinking, what's my eligible comp? Each employee's eligible comp for ESOP allocations is the sum of 2 items. The first is total regular wages. And item number 2 consists of any bonuses or commissions. Now, an important thing to note, the amount of bonuses or commissions that is includable for ESOP eligible compensation calculations is capped at 50% of an employee's regular wages. So to create a better understanding, let's go through an example. Meet John. John earned $40,000 in regular wages for 2017. John is in sales and also earned an $8,000 commission. So, John's ESOP eligible comp is the sum of his $40,000 regular wages, plus John also gets to include 100% of his $8,000 commission. This brings John's total ESOP eligible compensation to $48,000. Now, if John's commission had been greater than 50% of his regular wages, any amount over that 50% mark would not be includable. For all MacArthur employees, the dollar value of each year's ESOP contribution you see flow into your account will vary depending on our current stock price. But as a point of reference, the 2016 ESOP contribution came out to a dollar value of about 26% of each employee's eligible compensation. Now I want to stress, I was just using 2016 to show the potential benefit of our ESOP. The actual dollar amount you see flow into your account will vary from year to year depending on the financial performance of our company. At this point in our conversation, it's important to discuss when you will receive an ESOP certificate. You will receive an updated certificate showing your account's value each July. Now you may be asking yourself, if the year ended on December 31st, why does it take 7 months to get a certificate? Now this is a great question, and here's what happens in those 7 months. In January, we complete our year-end accounting. Then, an independent CPA firm shows up in February to audit our financial records. This audit takes about 2 months and puts us into April. With the auditor's stamp of approval, a valuation firm uses the results on our financial statements to come up with a value for our company. This process takes a couple of months, putting us into June. Now it's Principal Financial's turn. Each June, Principal updates our ESOP account balances. Then, finally in July, principal mails updated certificates to each participant. Our valuation is driven by two main factors. The first is our earnings. Our current earnings are analyzed to estimate our future earnings. The second big factor driving our valuation is based on what other companies in our industry have recently sold for. So for another way to look at these two major factors, it would be like saying, what do our future earnings look like, and how much would somebody pay to have ownership of those future earnings? So in summary, regarding the timeline, the annual closing of our books, the audit of those books, getting valued, allocating shares, and finally mailing updated certificates takes about 7 months. We're nearing the end of our ESOP discussion. And at this point in our conversation, you now may be asking yourself, okay, so I have ownership in the company, but how can I affect the stock value? Well, as I said before, our earnings play a major factor in our valuation. Healthy earnings equal a healthy stock price. It's just that simple. So here's a couple items each of us can do to help keep our earnings healthy. Number 1, be safe. Injuries are not pleasant for anyone, including our earnings. Number 2, treat our inventory like you own it personally, because you kind of do. Number 3, treat our customers and vendors the same as if they were the customers and vendors of your own personal family business. Our company's value is directly connected to the quality of our customer and vendor relationships. And finally, and most importantly, it's all about character. Be honest, work hard, work smart, and work together. It's just a better way to live. And as a bonus, at MacArthur, we get to own a piece of the value our honest efforts create. By working together to nurture a culture of ownership, each of us will have a positive impact on our earnings, which drives the value of MacArthur and in turn drives the value you see flow into your ESOP account. Now, this was just a brief overview of our 401k and stock ownership plan. The exact details will vary, but you now likely have a better idea of where the numbers are coming from. If you have additional questions, you can always call us here in St. Paul. The contact info will be in the credits of this video. Thanks again for your time. And remember, a company cannot rise above its people. So let's all work together to keep MacArthur growing and keep MacArthur strong.